It's Wednesday, the 21st of July, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. 13 million Australians are in lockdown this morning as Victoria extends and South Australia shuts down for 7 days. That's our main story. Also this morning, BHP mulls a $15 billion sale of its oil business. Council assisting the Victorian Royal Commission into Crown Resorts recommends the gaming giant lose its licence, and how the rough and tumble of cattle saleyards has been replaced by computers. Then stay listening for my chat about how technology is revolutionising insurance in Australia. But first, here's a brief look at markets. It was a much better night on Wall Street after the falls of 24 hours earlier. The S&P 500 and tech-heavy Nasdaq were both up 1.7% in early afternoon trading. The Dow Jones Industrial Average was 1.8% higher. European markets also recovered, with the FTSE and Stoxx Europe 600 both ending up 0.5%. Japan's Nikkei stock market officially fell into correction territory yesterday after dropping for the fifth straight day. It's now down more than 10% since February. The local share market closed 0.5% lower yesterday to 7,252 points. Materials, utilities and energy companies all performed poorly, while healthcare stocks were again among the best. BHP and Rio Tinto both fell more than 2%, following similar declines on Monday. National Australia Bank, Westpac and Commonwealth Bank were all lower, while the retailers were higher. CSL led the way, up 1.3%. Oil prices were up overnight after their big falls yesterday, and Brent crude is trading around $69 a barrel. Gold prices were flat. The Australian dollar fell to 73 US cents overnight, its lowest level since November last year. The Aussie unit tends to get sold off when investors are looking for less risky assets, and that's caused the sharp decline over the past week. It's currently trading around 73.3 US cents. And cryptocurrencies have come under pressure, with Bitcoin falling below $30,000 a unit. That's less than half what it was in April. One significant reason for the drop is China shutting down Bitcoin miners. These miners use significant energy to calculate the value and protect cryptos, and Beijing has closed them as part of its push to lower carbon emissions. 13 million Australians are in lockdown this morning after South Australia went into a 7-day closure last night, following a total of 5 cases in the state in recent days. Victoria's 5-day lockdown was due to end last night, but has been extended by a week after the state recorded 13 new virus cases yesterday. And Sydney remains shut down after 78 new community cases of COVID-19, 21 of which were infectious while in the community. Last night, a shutdown was ordered around the regional town of Orange in the central west of New South Wales. Other states, including Tasmania and Western Australia, have pretty much closed their borders to the shutdown states. In New South Wales, Premier Gladys Berejiklian defended her decision to shut down the construction sector and said it would reopen on July 31. Along with schools, construction was a priority to get up and running again. Victorian Chief Health Officer Brett Sutton was more upbeat about his state's prognosis and said things were going in the right direction. South Australian Premier Stephen Marshall said he empathised with the economic pain caused by lockdowns, but he needed to act quickly. As a result of the lockdowns, several industry groups called for greater federal support, including the reintroduction of JobKeeper. The Expenditure Review Committee of Federal Cabinet is due to meet today to reassess subsidies. Meanwhile, Federal Health Minister Greg Hunt yesterday hit out at critics of the vaccine rollout, saying it was a fantasy to suggest the government could have early access to mRNA vaccines such as Pfizer. The local regulator is currently expediting an application to vary the approval of Pfizer's vaccine to include teenagers between the ages of 12 and 15. Just over 10% of the population is fully vaccinated after 1 million jabs took place over the past week. It's Groundhog Day for many Australians. I'm sick of it. I'm sure you're sick of it. Get vaccinated. In a moment, the rest of the news you need to know this morning. In overseas news, the Delta variant of COVID-19 is quickly becoming the dominant strain across the United States, with cases rising. Health officials said a full reopening of the country may need to be delayed. The number of deaths from COVID each day is now 239, up nearly 50% from a week earlier. Almost half the country is fully vaccinated. On Monday night, a group of countries, including the United States, United Kingdom and New Zealand, accused China as being at the heart of a wave of global cyber attacks. Yesterday, Beijing hit back, saying the allegations were groundless and a malicious smear. If nothing else, it demonstrated that China is at loggerheads with many nations at the moment, not just Australia. And Jeff Bezos, the recently retired founder of Amazon, made it to space overnight, 105 kilometres above the Earth. Last week, Sir Richard Branson achieved an altitude of 88 kilometres above terra firma. Both men are heading companies that want to make space tourism a thing. Locally, BHP, the world's biggest miner, is considering exiting the oil business, according to a report on Bloomberg overnight. Worth around $15 billion, the big Australian is considering a trade sale. It's part of the miner's efforts to reduce its carbon emissions, the report said. The oil operation has long been one of BHP's strategic pillars, and management expects the business to make money for at least another decade. But its earnings contribution is well below that of iron ore and copper, and selling it now would help BHP reduce its carbon footprint. BHP wasn't commenting. It came as the group's iron ore division set a new export record in the last financial year, even though the final quarter was weaker than expected. It means the three big producers of iron ore, BHP, Rio Tinto and Brazil's Vale, have all reported weaker production in recent months at a time when prices are high. BHP also said it expected Chinese restrictions on coal exports would remain in place for a number of years. Counsel assisting the Victorian Royal Commission into Crown Resorts said the gaming giant was unfit to hold on to its Melbourne licence and might not be able to return to a point where it would be suitable. In his closing submission, Counsel Adrian Finanzio was critical of the boss of Crown Melbourne and said he had little confidence in the group chair Helen Coonan's ability to shepherd in change. Crown had lost the confidence of the public and reforms could take at least 2 years, Mr Finanzio said. He slammed Crown for systemic breaches of the law and highlighted allegations of a $270 million tax fraud and credit card fraud. It was a very, very critical final submission to the Royal Commission, and there is now a real possibility that Crown will lose its licence in Melbourne or have it suspended. It also brings into play the option of a merger between Crown Resorts and rival The Star. Crown will put forward its final submission early next month before Commissioner Ray Finkelstein deliberates and makes his final recommendations. Crown's share price fell 2.6% yesterday. Explorer Oil Search is in hot water after rival Santos said that late last month it had put forward a merger proposal with the group to create a regional champion. The notification came 24 hours after Oil Search's chair, Rick Lee, said the group had received no takeover approaches. Santos wanted to create a $23 billion oil and gas market leader, with Oil Search shareholders owning 1/3 and Santos shareholders the rest. Santos said a merged entity would be able to compete with global peers, but the approach was rejected by Oil Search's board. Mr. Lee on Monday, speaking after CEO Kieran Wolfe was forced to step down, told investors no approach had been made. That, at best, is misleading. Late yesterday afternoon, Oil Search said it would be open to an offer from Santos that reflected the value of the group. Santos's share price fell 5% yesterday, while Oil Search was up more than 6%. The Reserve Bank Board noted the high degree of uncertainty about the economic outlook at its meeting 2 weeks ago, which meant there was a need to be flexible about increasing or reducing weekly bond purchases. That insight came from the release yesterday of minutes from the RBA board meeting and triggered several economists to predict that the central bank may not scale back its bond buying program, effectively keeping a lid on longer-term rates. The Reserve Bank board met ahead of the lockdown in New South Wales, Victoria and South Australia, and much has changed since then. In other economic news, the ANZ Roy Morgan weekly measure of consumer confidence fell more than 5% as strict lockdowns hit sentiment. Australia and the United States are in talks to deepen their military cooperation, including new exercises on Australian soil, according to a report in the Australian newspaper. The aim is to strengthen the interoperability of both countries' forces amid rising tension in the region. JB Hi-Fi said sales jumped 13% last year and pre-tax earnings were up more than 50%. There were strong sales across the business, including online, according to its preliminary unaudited result for last financial year. Earnings from its The Good Guys stores were particularly strong. Chief Executive Richard Murray said investment in supply chains and e-commerce had paid off. JB Hi-Fi's share price jumped nearly 4% yesterday. There was finally some good news for AMP Capital yesterday. The independent board representing the fund's management business rejected a takeover of its $1.4 billion community infrastructure fund. Several of the social infrastructure fund's managers have left AMP Capital recently and joined Plenary Group, and that triggered the review. David Jones and Country Road, both owned by South African retailer Woolworths Holdings, have performed better during the June half year, with DJ sales up 17%. However, costs associated with the closure of its food business will trim profits. COVID restrictions have kept people at home, and some of the money saved by not going on holidays has been spent in the shops, the retailer said. I had an uncle who was a stock and station agent many years ago, and one of my greatest childhood memories was going to the saleyards and watching him sell livestock, speaking at a pace a podcaster could only dream about. With COVID lockdowns and border restrictions, the saleyard has gone digital. Record numbers of cattle and sheep were sold via digital marketplaces over the past year, with the trend extended to seed supplies, second-hand machinery and clearing sales. Auctions Plus, a digital marketplace jointly owned by Elders and Canadian fertiliser group Nutrient, recorded a 27% jump in cattle transactions last financial year, according to the Financial Review. Sheep sales were up 10%. And good luck to the Australian Olympic team. While the opening ceremony is this weekend, some events start today, including the Australian women's softball team taking on home nation Japan this morning. The Aussie women's soccer team takes on New Zealand tonight. And in between, we find out if Brisbane will be confirmed as host of the 2032 Olympics. Don't go anywhere, because up next is our daily interview. Today I'm talking to Rita Yates, the CEO of InsurTech Australia. It's safe to say the insurance industry is changing. Recently, I had to make a claim on my car insurance for the first time in a very long time. It was a whole lot easier than I remember it being, and one of the reasons for that is the role of technology. Insurance technology is changing insurance in the same way that fintech changed financial services, and Rita does a terrific job of explaining how it affects us all. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Wednesday, the 21st of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.